What's up guys, Rodrigo here, welcome back to one more video. I'm glad to have you back. Today we are going to talk about a very important topic guys, candlesticks. It is very important to have a great understanding on the candlesticks because it can help you to understand better where the market is going to, if you are going to have a continuation or a reversion. In other words, candlestick patterns can show to us strength or lack of strength on the market. So by this point you understood already the importance of unlocking this knowledge. It's going to help you better understand the charts, have better entry points and more profit. So if that sounds interesting to you, stick with me until the end of this video. Don't forget guys to use the links down below to sign up to Bybit and Bitflex. Two very good and very reliable exchanges. The first one, Bybit, is giving to you up to $30,000 bonus guys, but it requires KYC, so if you want to trade anonymously, I would suggest you to use the second link and sign up to Bitflex. So let's go for it already, and the first one that I want to show you is the engulfing candles. We have both variants. We can have a bullish engulfing candle and a bearish engulfing candle. And what is the definition? The definition is, for the bullish one, the close of the candle is higher than the close and the opening of the previous candle, while for the bearish one, the close of the candle is lower than the close and the opening of the previous candle, completely overlapping and engulfing the previous candles, like this one and this one. And it is also important to highlight here that the bullish engulfing candle, we want to see it after a huge movement to the downside, the end of a downtrend, and it is going to help us to find the lows of the trend, like this one, this one, this one and the next one. While the bearish engulfing candle we are going to find on the tops of a trend, so we are looking for a trend to the upside, and it is going to help us finding the tops like this one, helping us identify the beginning of corrective movements like this, and this, or even the beginning of the whole trend inversion, like here for example, or here. It is very simple to identify these candlesticks on their charts, so let's go for it. Here you can see that we had one exactly on the end of this downtrend and on the beginning of this big bull trend right here. There it is, another one signaling for us that this corrective movement right here is over. Another one showing that this corrective movement is over. Another one, same thing. Now let's look for bearish ones. As you can see, there is one right here. There is another one right here. Always been very assertive and increasing your profits. Like after this one, we have here 5%. After this one, we have 6%. After this one, 7%. This one, 10%. This one, 14%. This one, 10%. So let's simulate a trade right now, guys. As you can see above us, we have a huge level of resistance, of previous resistance. We are trending to the upside. We are making higher highs, but we are breaking the previous highs here, and we have no continuation to the upside. Here once more, we broke above the level of this previous high, but we have no continuation to the upside. So the context is given already. We are trading to the upside, near a zone of resistance, of major resistance, so we are searching for a bearish engulfing candle. Let's go. No, not yet. This one, we are not overlapping the previous one, we are closing exactly at the same level of the opening. And there we go. Finally, this is our signal. Can you see? We went all the way to the resistance, were rejected by it, and the next candle is an engulfing candle, guys. That's our trigger. So from this moment here, we would open a short position with the stop loss above the level of this wick right here. You can also place it above the level of the resistance. And the targets you could place at the level of the next important supports, like this one and this one, for example. So let's see how it goes. Boom, target hit 14.4 4% more to your portfolio. The next candlestick pattern that I want to show you today, guys, is the hammer and the inverted hammer. They are also candles that denotes the reversion of the trend. So for the hammer here, as well as the bullish engulfing candle, we want to see it at the bottoms, at the lows of downtrends. And for the inverted hammer, the opposite, exactly as we just saw for the bearish engulfing candle. So let's go to the charts already, guys, without further ado. And there it is, guys. That's how it should look like. One right here, inverted one at the top of the trend. Another one at the bottom of the trend. Another one right here at the bottom of the trend. Another one right here. As you can see, it is not at the top of the trend itself, but it is after the relief rally. It's the top of the relief rally. And all these times, guys, if you would have traded 6.4%, 6%, 0.7, 5%, 4.5%, 7%. So let's practice a little bit, guys. As you can see, we have these both zones here that has acted as support and resistance, 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 resistance. So let's see the potential entry points here using these candlestick patterns. As you can see, we managed to break above the level of this previous resistance right here and went all the way up to the next level of resistance. Approaching these levels, we failed to break above the level of this resistance and we formed a inverted hammer. So we would open a short position here from this point with the stop loss above the level of the week right here, with the target at least to the level of this previous important resistance right here that is going to act as a support for us. But this candle can also indicate the correction of this whole trend to the upside that we have here. So we can use the help of the Fibonacci retracement here to set a better profit zone. So let's target here, for example, the 0.618 of Fibonacci. As you can see, we are so far being supported by this level, but the price went up again, formed a double top. At this top we have a hammer, and at this top we have an engulfing candle, a bearish engulfing candle. So guys, if you didn't enter a trade yet at this signal, you have another signal right here to open a short position. The price is very weak. And there we go, guys. We broke below the level of the support right here and hit our target, giving us 4% without leverage. After breaking a level of support, what usually happens? The retest of it as a resistance. So let's see what happened right here. Boom. And there it is. After breaking right here, we retested it, forming another inverted hammer right here after this relief rally. And this place would be another good place to enter a short position. Once more, with the stop loss above the level of the week and the resistance right here on this case, and with the target all the way to the previous low that we had. Boom. Target hit, guys. Success. Target hit. And as you can see right here, we would have done on this trade 4.6% without using leverage. Of course, guys, absolutely nothing on the crypto market is 100%, so there are going to be some fake signs. And for this reason, I would tell you to not use this strategy alone. Always try to add some support and resistance zones and also confluences with other indicators. If you like this content, guys, please don't forget to smash the like button, share this video with your friends, of course subscribe to the channel, and if you really like this content, let me know in the comment section and I can bring for you the second part of this video. That's it for today, guys. Thank you very much for being here with me until the end, and I see you in the next time. Stay focused!